Looking back over the last 12 months, our central theme of moderate growth for this year held true to a large extent. Growth decelerated across the region, and we've also seen momentum lose steam in many parts of the region in terms of occupancy and rent gains. But we also saw a resurgence in leasing activity over the second half, which should put the region in a better position by the end of this year. For next year, we are expecting slower growth to continue, but still remain supportive of property fundamentals. We remain confident in Japan's commitment to growth, as well as the bold economic agenda of our new leaders in India and Indonesia. We also think that the spate of free trade agreements we've seen in South Korea, ASEAN community, and even in Australia would be good for overall growth. Now, given this background, we are expecting that the absorption gains to be rising once again and possibly reach a 7-year high next year. It's also worth mentioning that the wave of quality projects across Asia will give rise to competitive urban centers, and that's actually welcome news since we've seen markets like Shanghai, Jakarta being constrained by the lack of options. Now, on the investment side, the continuation of lower returns is a new reality that is evolving across elsewhere, but there are compelling reasons for continued interest in Asia as an investment destination. A number of Asia Pacific markets still have scope for improvement, and given or in light of the regulations and better governance happening across the region, we expect better things to happen within the region. So overall, 2015 should be better than 2014.
Market fundamentals in 2015 will be much more positive than 2014, with positive rental growth and strong absorption predicted across all core markets. Stimulatory macroeconomic measures in China, India, and Japan will generate strong investor demand in Shanghai, Beijing, Tokyo, Mumbai, and Delhi. The core markets of Seoul, Singapore, and Sydney will also benefit from strong investor demand on the back of very positive economic fundamentals. If we look at capital leaving the region in 2015, we'll see a much stronger flow to Europe and the US, generated by a higher level of opportunities, but it will still be a trickle compared to the amount that's invested cross-border in Asia itself.